Hey guys, it's Chris Fang here. For this video, I'd like to talk about FEPI, or FEPI, which is the Rex Fang and Innovation Equity Premium Income ETF, and it's by Rex Shares. As a disclaimer, I'm not a financial advisor. I'm just a guy who's interested in building a portfolio. So I'm not sponsored by any investment companies or by any brokers. I'm just talking about my investment into FEPI. So this is not financial advice. This is just a conversation about me talking about why I invested into FEPI and just based on what I read on the website. So I'm a Canadian investor and I hold some USD ETFs in my RRSP. And I decided to invest into FEPI a couple months ago in Questrade. It makes up about 8% of my RRSP account in Questrade. The reason why I like FEPI so far is because the last few distributions paid out about 25% dividend yield. So investing around $55, $56 a share, and the dividend per month was like $1.15 to $1.19 a month. So that came out to around 25% dividend yield if it was calculated on an annual basis. So after going through the website and checking on the holdings, I found out that they have 15 holdings and they're all big tech companies. And the Magnificent Seven are on there. So Magnificent Seven includes stocks like Apple, Tesla, Nvidia, Amazon, and even like Meta as well. So those companies are on the NASDAQ. Those companies are on the top of the list of the NASDAQ. So even though FEPI has 15 companies, I don't have any fears about the fund failing at all. And I think the fund is going to do well long term because they picked the top companies of NASDAQ and they have big tech companies in it as well. Even though it's only just 15 companies, but if you just have one company in it that fails, then the other 14 companies will back it up for the overall share price. And even if they decide to eliminate one company, they can just fill in with another company. So I hold in my RRSP account because 15% withholding tax is taken off for dividends in other accounts. So in the RRSP, the 15% is waived. Now I may consider getting it in my TFSA in the future because losing 15% off a 25% yield fund is still a decent amount. So the other reasons I found beneficial for adding FEPI to my portfolio was for diversification. So instead of just focusing on QQQY, JEPY, HYLD.U, or SVOL in my RSP, having FEPI was a way to add diversification. So in diversification, at least I get a different investment company to invest in. I get a different dividend payout date. I get a different dividend yield. So after having conversations with some people about technology stocks, I remember some people were saying tech stocks are very volatile, or tech stocks are going to be our future, or tech stocks can crash. If I was buying each of the stocks individually, I might have that fear. And I don't fully understand about investing in individual stocks. So that's why I prefer more ETF styles. And at least with investing in FEPI, it's 15 technology companies. And 7 of them are the Magnificent Seven. So I'm not fearful of FEPI failing. And so far what I've seen is the stock price fluctuate between, say, $49 and $56 or $57. And $49 was just around the time when all the stocks went down last October or November 2023. So with investing in FEPI, even if I bought them at a higher price than last October, when it was like $49 or $50 a share, I'm still getting a 25% dividend yield. Hopefully that the yields don't drop too much. And this is a prediction based on the last few distributions. So I'm not going to say that the dividend yield is going to be 25% every single month going forward. But at least I'm still getting monthly distributions so I can actually reinvest for either more FEPI or more of other funds. I hope this video provides quick insight on why I invest in FEPI. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.